going, well, you know, this insurance thing, it's not bad. You know, I think I could do this. So, you know, maybe I should consider going and getting a CPCU designation. You know, that would be kind of good for my career. And then I thought, but what if I don't want to stay in this insurance thing? You know, I may want to go do something else. So I went back to school and got an MBA. Now you can clearly see where I landed because I'm still in the insurance industry. So maybe I should have gone back and got that CPCU. So congratulations to all of you for actually going and getting that attainment. That's quite an accomplishment. I think it's probably equally as hard as going through and getting an MBA degree, especially with all the upkeep that you have to do. So congratulations to all of you, and thank you for all that you do. I'm going to be very conversational, and I hope that you guys, you know, if you have questions or comments even along the way, I don't mind that. So feel free to raise your hand. I'm pretty easygoing, kind of roll with the flow, so I don't mind that at all. Just a little bit of background about the department. We are a cabinet level agency. We were formed, actually the Department of Insurance was formed by a constitutional referendum by voters of the state of Missouri in 1992. Before that, we were actually a part of the Department of Economic Development, but we kind of stood out on our own. In 1992, became a cabinet level agency. I am actually appointed by the governor. Now we have really grown well beyond just insurance. So we actually have 9 divisions now. And those 9 divisions, you may not know, actually fall within our department. So we have 4 that are really devoted to insurance regulation. That is our internal administration division. We have our company regulation division, which really focuses on the solvency and company licensure. We have our market regulation division, which is on the market conduct exam side, as well as the product filings. Then we have our Insurance Consumer Affairs Division, and those are the folks that investigate complaints against both insurance companies and producers. So those are our insurance divisions. But we also regulate all state chartered banks, state chartered credit unions. We picked up the Division of Professional Registration in 2006. So that is the division that regulates and licenses all professions in the state of Missouri, I think, except for lawyers. So everything from doctors and nurses to tattoo artists, cosmetologists, barbers, veterinarians, accountants. We have 43 professional boards that regulate about 550,000 licensed professionals in the state of Missouri. So it is a very, very large division. But, you know, with the licensure piece and that regulatory purview, it really fits well, right, within the banks, credit unions, and insurance. And then back in 2020 or 2019, then we were honored, I guess you could say, to get 2 more new divisions to join us. And that is our division of, or I guess it's the Public Service Commission, which actually regulates all investor-owned utilities in the state of Missouri. And then, interestingly, they have kind of a cousin out there called the Office of Public Counsel. And what the Office of Public Counsel does is it actually represents taxpayers in the regulation of those investor-owned utilities. So, for instance, when Ameren goes to file for a rate increase, the Office of Public Counsel will actually intercede, review that rate filing, and then if they feel it's inappropriate, they will actually intervene on the public's behalf. So, across all of our divisions, we have roughly 780 employees. So we're much bigger than we used to be. On the insurance side, we have currently about 230 FTEs. We're down about 25, so we've got about 25 vacancies right now, but normally fully staffed would be about 230 employees. The big thing that I really wanted to focus on as I talk a little bit more about our divisions and what we do is kind of, for me, the big deal this year in the P&C world, and that is, oh my Lord, we have had a lot of catastrophic weather events across the state. I tell folks I was at the department in 2011 when the Joplin tornado hit, so I was down there. I think it was 2 days after that tornado hit. At the time, I led our Consumer Affairs Division, and so our team spent 18 months on the ground in Joplin, working with consumers directly and trying to help with those recovery efforts. This year, we're getting to a point where we're actually, it's the biggest year since Joplin. So Joplin was about a $3 billion loss, $2.1 billion in insured losses. Right now, we don't know what the total damage estimation across the state from all the weather events are, but right now we're about at $2 billion in insured losses. So we are very, very definitely seeing a heavy impact from that storms activity this year. And so our team has been very, very engaged all across the state and working with Missourians to try to help them to recover from a disaster. The biggest struggle that we have, to be quite frank, is that most folks don't know that we exist. And I like to really talk about, and for me, this is an avenue that I think for the most part the industry looks at what the department does in terms of regulation as an obstacle and something that they don't like. But I having crossed back over from the industry back to the department now, I can tell you actually what we do in our Consumer Affairs Division is actually very helpful to the industry, because we actually provide an alternate means to help consumers rather than them just picking up a phone call and calling the first attorney whose billboard ad they saw. And so if folks can come to us first, if they can do that before they see those billboards, before they make those phone calls, hopefully we can intercede on the industry's behalf and actually, kind of mediate those cases to where they'll be resolved. So I try to always tell folks, don't look at it as the big bad, thing, because sometimes these are, it is a consumer benefit that we do this, it is free of charge, but there's also a side benefit to the industry as well. So we like to be a partner. So just again, a little bit about what we do. The predominant role that we do is after there's a storm event, we work with the State Emergency Management Agency to coordinate and go out to in-person events across the state. Those are called multi-area resource centers, MARCs is what we call those. We typically partner with organizations like the Red Cross, Salvation Army, any of those Good Samaritan types of organizations that are going out to actually be boots on the ground to help people with their immediate needs, but also some of those financial needs that they have. There's also a spin-off of those called the Disaster Recovery Center that we do. But again, to kind of put into perspective what we're seeing this year in terms of activity, we've had contact with over 1,600 Missourians directly at those MARCs or disaster resource centers statewide so far this year. We have responded to over 14,000 consumer phone calls, responded to 14,500 emails, 1,600 consumer complaints as of the 1st of August, and about 2,400 consumer inquiries. And what I like to put this into perspective, we have a staff of about 20 that handles that. So that is a very high volume, high activity call center there. And we've had to do a lot of internal shifting with staffing to try to help with those volumes because it has just been overwhelming for the team. So we've actually redeployed some of our market contact examiners to actually go in and work consumer complaint files just to try to keep afloat. And then really what I'm most proud of is that last year our Consumer Affairs Division had a record-breaking year. They recovered $22.6 million for Missouri consumers. I was very upset when I came back to the department because the prior record was mine. We set it in Joplin in 2011 and it was 19.6. So when I came back, I talked to the new Consumer Affairs Director, and this was at the 1st of March, and she told me, that they broke the record, and I said, well, little girl, let me just tell you, you need to re-break that record because now I'm back and I want the record back. I did not know that was going to mean a lot of storm activity, and so they have actually re-broke that record. So as of July 31st, they're already sitting at $23.6 million. So I have a very strong suspicion that this year we may actually approach 30 million. With the volume of complaints that we're seeing, the type of complaints that we're seeing, it very much feels like this could be a $30 million year. And before I go back to that, I just want to say too very quickly, So I've had the opportunity in the last month to spend some time in St. Louis. And St. Louis is very, very troubling to me. It is, I think everybody knows that the area of St. Louis that it hits is obviously a very, part of it was very high income, but the vast majority of the areas that sustain the most damage are very, very low income. Before I came back to the department, I actually lived in the central West End, not very far where the tornado went through. So when I saw, kind of some of the preliminary reports, I looked and I was kind of like, oh, I know exactly where that is, and I don't have a good feeling about this area. I think we're going to be having a very significant uninsured population. So I went back to our statistics department and our team and I said, is there any way for us to try to estimate what we would be looking at in terms of an uninsured population? Because that's not something the department has ever done before. We're one of 2 states in the country that actually collects zip code level data from the industry every year for private passenger auto and for homeowners insurance, and we've done that since 1987. So we have a lot of data that we mine and get every year, and we can do a lot of, market reports and kind of talk about the state of the industry. But that's all obviously data that comes from insurance companies, so it doesn't really tell us who's not insured, right? We're just dealing with the known of who has coverage. And so our statistics team said, well, yeah, Angie, actually we think we can. We think that we can, run our data up against some of the census data, American Community Survey, and it can give us, it's not necessarily an apples to apples, but it's pretty doggone close, and it'll give us a rough area. And so when they did that, I think the most impacted zip code was 63107 in St. Louis. And in that particular zip code, we found that 73% of homes were uninsured. 92% of renters did not have renters coverage. And so that told me, okay, my gut was right. We are really seriously having a big issue here. And for me, it's my mindset of, oh my gosh, I want to help people. I want to, try to help this community recover. But in the same point, I thought it was also very important for us to get out in front of that message, because having gone through storms over the years as I have, there's this perception that goes on when folks see blue tarps around a community. I don't know if you know this, but when they see blue tarps, they automatically assume it's insurance companies that haven't done their job. And so, it was important for me and for the department, I think, to get out there and start letting people know ahead of time that we were going to have some blue tarps in this community that probably were going to be there for quite some time, but it wasn't because of a failing by the insurance industry. We've got something else going on here. So I've actually gone back to St. Louis a couple of times. Most notably, I did 2 town hall events, one actually hosted by the NAACP. And I'm telling you, when you talk to these individuals, it is very, very clear to me that from 2011 until now, the financial literacy of the folks in our state has gone down. And I'm embarrassed to say that. I mean, it's absolutely horrible. But the number of people that I talked to that didn't understand that they could take those first checks and cash them to start replacing stuff and start going out and rebuilding and start to pay contractors. They had been in their mind thinking that if they sign that check, that's all they ever will see. And so a lot of those tarps are sitting out there because they have a check from the insurance company, but they just haven't realized that they could start that process to start recovering. And just the unbelievable misunderstandings and confusion that's going on has really, really been highlighted. And so from my perspective as a regulator, that makes me sad. It makes me angry. It also makes me want to get out there and do a lot more in terms of, consumer education. Where have we failed? What more can we do? But I do think that this is probably something to talk about in the broader context of the industry as well. Because as I've often said, when you have someone that has a claim, more times than not, that may be the first time they've ever gone through that process, or they may have had a claim many years prior. So what happens is their point of reference becomes whoever they know that has had a claim more recently. And that person becomes the subject matter expert. And that person tells them what happened to them and how their insurance company handled things. And if this person experiences any deviations from that, they automatically assume that there's a problem. And so what we should be doing better, and this is not necessarily on the industry, I think this is an opportunity again for collaboration, is I think that we need to do a better job of telling folks when you file a claim, here's what you should expect, because they have no idea. And a lot of that dissatisfaction, a lot of the media reports are coming just simply from the fact that they just don't know what's next in the process. And how simple is that to give somebody a step-by-step guide to say, here's what's going to happen next. Here's what you should suspect, or expect, not suspect, but expect. And so I think there's a lot of opportunity, and so I'm hoping over the next couple of years, we at the department will be able to step out and do a lot more things. And my hope is as we do these things, the industry may actually do things like take some of this material, take some of these resources and actually use them, because I think that's where it will be most effective. So that's my little stump speech. And that goes right into the heart of, we really are trying to do more in terms of that education piece. So that's kind of my big, if you want to ask what Angie's big aspirational goal is coming back to the department, it really is. I think that there is such an opportunity for us to step up and really start to increase that literacy about insurance within our state. And I really want to focus as much as I can to try to improve that environment and give folks a little bit more education. But now back to the dry, non-fun stuff. Just a little bit again about some of our divisions within the insurance part and sort of what we do. So if you don't know, obviously market regulation are the folks that most people here don't like. But what they do is they're responsible for monitoring the insurance industry and their response to claims. Market conduct specifically is the mechanism by which we do that. Last year, they recovered nearly $4 million for Missouri consumers through market conduct actions. Again, by July 31st of this year, they're already sitting at $3.5 million. One of the things that we're really taking a closer look at from a market conduct perspective, so this is kind of my free, take this back to your companies and tell folks to be thinking about these things because these are areas the department is looking at, is the use of third-party models. And my own personal perspective is I'm a full believer in technology, I'm a full believer in being innovative and everything else. But what we're seeing is that as many companies are adopting a lot of these third-party models, they're just pulling them off a shelf and they're implementing them. But what they're failing to do is really understand how those models are interacting with their existing rating plans and rating systems. And so what we'll see is that in many cases, you'll have double dipping, what we call double dipping, which is a concern. So you could have a factor that is somehow already accounted for within your rating plan, and it's already being hit, and then somehow through this third-party model, it's coming back at it again. So one of the things that I'm hoping that the industry will do, and we're going to try to do a little better job of explaining this, is we just want the companies to understand what they're utilizing when they get these third-party models. Understand the factors that it's relying upon. Understand the factors that it's utilizing and reviewing. And then look at your current existing rating plan. Maybe you're running multiple models. Are they using those factors too? But it isn't the third-party vendor's fault. It's really an obligation, I think, on the companies themselves to understand what they're buying, what it's doing, and how it's interacting with either your own existing rating system or other models that you're using. So on total loss valuations, another area where we're seeing some issues, and this is really on the auto side, and we're seeing it, and there's been a lot of activity and news coverage about this across the country. I don't know if you've seen this, but there's been several class actions that have been filed. I think one recently in Arkansas, there's been, I think, Another big one in Georgia, and I am aware of one also being filed in Missouri, and that is with these total loss valuations of automobiles. When you use those systems, a lot of times they will give you the various categories, like here's a dealer ready, and I always forget what all those different categories are, but what is happening is that companies are sometimes making downward deviations from those categories, and again, I think it's because they're not really looking at what's contemplated in that category in the first place. So then when you make a downward deviation, like if you say something is, I'm not going to say it's dealer ready, but whatever the category is below dealer ready, they're subsequently going out and they're making downward deviations for things like tire wear and tear and the fact that it's not cleaned and et cetera, et cetera. I think we're fine with downward deviations from, a category, but they need to be substantiated, right? So to the extent that, it's maybe, it falls between two, you go to the upper one and you need to make deviations down, perfectly fine. Just make sure that they're substantiated. Don't just as a pattern of practice go out and start subtracting and making those deviations without there actually being a justification for it. And again, I think that's just, a lack of knowledge on adjusters' parts of not really truly understanding the categories themselves and sort of what they were intended to contemplate. So to me, that's low-lying fruit. If you do those things and you do it right, then you shouldn't have a market conduct issue. You don't want to see us put us out of business. That's always a good thing. So, and again, all that data that we talked about, I mentioned about the uninsured, that also comes right now from our market regulation division. One of the things that we did this time is most states will roll out a disaster data call, and it's usually pretty, extensive in terms of what we ask for. Again, as someone who has spent 5 years on the industry side in a government relations role of, hey,
yes, you can fit it. Whenever you.
Sure. I became very cognizant of, even though I had loved data calls as a regulator, I suddenly became aware of how problematic data calls were on the industry side because I constantly had to intervene for my internal teams to get explanations and get extensions and get additional clarification on all those things. So I now have a slightly different perception of data calls. They are extremely useful for us as regulators to tell your story, but I think we as regulators need to be more cognizant of the workload that we're asking for and to make sure the data elements are truly needed and necessary and not just we're doing it just because of the fact that we can do it. So we actually took this opportunity to do a very scaled down, very targeted, small data call, just of those elements that I felt like we just really needed to know to get a handle on what was going on across the state. And actually what we did is before we sent it out, we actually solicited feedback from the industry. So we sent it out through the Missouri Insurance Coalition, asked for feedback. We actually made revisions based upon some of that comment that we got. And as a result, we had 95% of the industry respond back. We have never had a response rate that high, ever. So I was thrilled with that. But again, what we found is 1.6 million had been paid out already to date, with estimates of exceeding 2 billion is what we're expecting statewide across this year. Sorry, go ahead.
Sorry, I didn't want to interrupt.
No, you're fine. I don't mind.
Before we get into more of the numbers, just so I can follow along better, but more regulation on the previous slide, you had that it recovered $4 million, and then 2 slides before that
was consumer affairs.
Yeah, it was 23 million. What makes up those amounts? Like, what's recovered?
So with consumer affairs, it is any time that an additional amount is paid after that consumer files a complaint with us. So let's say that you had a claim and it was, you had paid out as a company maybe $100,000. The consumer says that's not sufficient. I want to go file a complaint with the department. And once they file that complaint, we look at it, we go back and forth with the company, get them to go look at the file. They pay an additional $150,000. We would count that $150,000 as a recovery that we made on that consumer's behalf. Market conduct, when we have these recoveries, when we find problems in market conduct, there's several things that we can do. We can fine an insurance company, we can order corrective actions, but we can also order restitution. And so these numbers actually reflect restitution that we have ordered through a market conduct process. So most of the time, these are, I would call them rating issues where there's been under or overcharges. I would say take up the big bulk of it. In some cases, it's going back, particularly I would say on the claim or on the health side, and going back and doing claims re-adjudications and then reporting back to us kind of the extra amounts that were paid. Does that make sense? So again, just to kind of show you some of the cool things now we're doing with that data, this is, now we actually have internal dashboards that we're looking at in terms of that catastrophe data. And we've got all kinds of cool stuff, like I can go in and look at specific insurance companies and where they are, but I don't get to share that with you guys, but this is kind of the high level stuff. And again, these were kind of the big buckets that I wanted to have a sense of what's going on in the industry. And I would say for me particularly, the one that I was most wanting to get a handle on is claims with a payment for any coverage. Because again, we are always concerned about, claims that are closed without payment. But again, kind of knowing what we were going to be facing in terms of the uninsured population and the typical friction that comes about after a storm, I wanted to be able to tell the good story for the industry, and that is how many claims have actually had a payment, right? We know that that process can be long and ugly and people fuss and don't like it. But to me, it was really important to be able to get out in front and be able to say that we have 76% of those claims have already received a payment. And that is a good story. That's a really good story. So, and then again, I thought you guys might find this to be interesting. This is, again, using our uninsured data across the state, so we can actually put this in a heat map. And I'll walk on this side of this, so I'm sharing, I'm not being favorited, but you can kind of see here, the blue is good. We like blue. Blue means that we've got higher than 50% coverage. But if you'll notice, there's these orange areas that kind of get a little darker. Those are higher uninsured populations. And when we first ran those numbers and we said, we found out all the areas in St. Louis and that one particular zip code was 73%, my next question was, what does the rest of the state look like? And I had a preconceived notion that Kansas City and St. Louis would be the worst. Not the case. These rural areas actually have 90+% uninsured. So the one commonality that we've been able to piece together as we've looked at this data of trying to figure out what's going on and why is that in Missouri, we have a very large tradition of multi-generational homes, where homes are passed down within families. And when that happens, guess what? There are no mortgages. And if there aren't mortgages, there's not an insurance requirement. So we thought that was kind of an interesting take. And this is that same data, but just looking at it, this was on a zip code level basis. So again, we can kind of really drill down into it. But if you were to look at it on a county basis, that gives you an even better picture. So Worth County is our highest. I think they're at 96% uninsured, which is just insane to me. And then the best counties are Camden, Carter, Lewis, Morgan, and Stone. And they have, I think, 20%. No, actually, all those counties, according to our data, are like below 1%. So congratulations to those counties. They know how to do it right. Again, just a little bit on some of what we do, in terms of that market regulation division. We obviously look at filings, right? The product filings that your companies, send to us that you love for us to look at and critique. I know how much you love that. So far, year to date, we've received over 3,000 filings. Last year, we had 3,200 filings, which consisted of 400,000 pages of materials. Trends that we're seeing is that the magnitude of rate increases for home and auto has slowed down quite a bit. Thank you. Although I'll take decreases. I'm always going to negotiate for more of those. While the rate increases have leveled off, the larger increases that we are seeing now are for homeowners 10 to 15% range. And so as I'm going out and I'm talking to people in groups about these storms, that's one thing that I'm trying to be very mindful of, is to tell folks the rates are going to come. It's going to be 3 to 5 years, but these homeowners' rates are going to go up, and everybody needs to start preparing for them. They will. Our insurance company regulation, again, are the folks that look at the solvency of insurance companies. They also do the initial licensure of insurance companies when they enter the market. So for the first time in Missouri, our premium tax collections have topped $500 million. Those funds go to the general revenue fund, so that is money that goes to the benefit of the entire state. Market is still very tough in Missouri, but interestingly, or not interestingly, but I guess more not surprisingly, we have seen the surplus lines market really explode. So much so that we're going to have to add additional staff to that team. So yeah, there is definitely growth in the surplus lines market. Our folks, when they're looking at solvency, they're definitely seeing that companies are starting to take seriously the impact of all of the weather events on the solvency, and so they're doing a lot more to try to shore up their reserves and to really tighten their underwriting. That's kind of been the big takeaways. We've really seen that underwriting tighten up. For us in Missouri, for those that don't know, we actually have 2 classes of insurance companies that write property insurance. How many of you know this? Maybe know this? Okay. Oh, we got Dennis knows this. So we have what most of your companies are, which are Chapter 379. That's our typical standard insurance companies, right? So that's everybody from State Farm, American Family, Shelter, and that really just refers to the chapter of law that they're licensed in. But we have this other chapter of law called Chapter 380 that recognizes and licenses this other category of property insurance companies, and they're called our farm mutuals. So in many cases, historically, these things started sometimes over 100 years ago, sometimes going back to the late 1860s, early 1870s. And I tell folks when I talk about them that they really kind of, to me, are like a county co-op, right? Very, very small. In many cases, they're just writing in one specific county. We do have a class of them called an extended county mutual that can actually write outside of their domiciliary county. But for the most part, they're still very, very small. And kind of in recognition of the fact that they are so small, they get a lot of exemptions from a lot of our traditional laws. So they're not subject to the Fair Claims Settlement Practices Act. They're not subject to the Unfair Trade Practices Act. There's a lot of different things that they're not subject to. And they're also not subject to the same solvency standards that the traditional 379 companies are subject to. And that really caused a problem over the last several years because I don't know if you heard about it, but we had some tightening in the reinsurance market a few years ago. And then not just in Missouri, but across the country, farm mutuals, we had a problem with several of them actually going under. So it was a big, big issue for us here in Missouri. These county mutuals serve a very important purpose. Because of the fact that so many of them are situated in the very rural parts of our state, they tend to be the ones who are writing in those counties where a lot of the traditional insurance companies won't. For things like lack of a fire department, lack of access to water. So these little county mutuals serve a very, very real purpose as a safety net. And it became a real concern to us on their financial solvency and their stability and their ability to continue. We've had some consolidations in that particular market that have helped a little bit. They're getting a little bit more savvy in terms of how they're underwriting now. But probably the single best thing that we did was create a reinsurance pool for them, because the reinsurance market did dry up several years ago, and that really had a terrible catastrophic impact on them. So again, this year we're very, very proud to say, once that reinsurance pool has gotten in place, we now have some improved results coming from this little market segment, the Missouri Mutuals. We hope that this is a harbinger of good things. Not all of the companies are part of this reinsurance pool, but for the ones who are, they actually showed a profit this year, which is something we have not seen in a number of years. So we are, fingers crossed, hoping that this trend continues, even with what we've seen in terms of the catastrophic weather events this year. In looking at their financials on their quarterly statements, it appears to still be stabilized. So very, very happy to share that. We're very, very proud of that. Our administration division also does all of our licenses for producers, and we license bail bond agents, surety recovery agents, TPAs, MGAs, a bunch of other insurance-related things. But as of June, that team had already processed about 296,000 license applications. About 13,000 of them were done online. Small amount of paper. Really trying to get people off of the old paper stuff and get back to electronic. It makes us more effective and efficient. God's sakes, it's got to be better for everybody else on the end user side too. But that is really all I have. If you had to know where to find us, dci.mo.gov is kind of the main branch, but insurance.mo.gov is the insurance part of it. But that's really all I had to put together in terms of an overview. And so now is my favorite part that I like to call Stump the Regulator. So you're more than willing to, and welcome to throw me any questions, comments, concerns that you have. And I'd like to just hear what you guys have to say. Yes?
Have you had an insurance company file an AI tool? Do you have any department approval? They're using underwriting or any other?
Not that I'm aware of as a standalone product. I think, sometimes you will see AI functionality built within models that probably have been reviewed, but not something specifically coming in saying, this is AI.
So, Missouri has not adopted the NAIC model.
We have not. I believe the prior administration had made an interpretation that it wasn't necessary and really that they had enough authority under existing law. I don't have any plans to change that.
Okay. So on the validation piece, what's your view on how between the insurance company and the vendor, the developer and the deployer, who should be responsible for that? How do you get that kind of information? It's pretty tough. I just wonder what your view on it.
Yeah, and so full disclosure, so I'm now also a vice chair of H committee through the NAIC, which is the technology branch of the work that we will be doing at the NAIC. So I'm going to be getting probably up to my elbows and eyeballs into a lot more of this. And we've got some work that we're doing led by Commissioner Humphreys in Pennsylvania in terms of some of those reviews. Again, I would tell you that my personal viewpoint is that I love innovation and technology. And so I don't want to do things that interrupt that process. And I see a lot of benefit to AI, particularly in terms of the customer service angle and the efficiency that AI tools can bring, whether it's, going through and analyzing and sorting through huge volumes of data. But I think that I would be remiss if I didn't say that we're in a societal climate right now where there is a lot of suspicion over AI generally. And so I think that we have an obligation to take those concerns seriously. And so what that means to you as an insurance company is that, again, kind of going back to what I said earlier, even on using third-party models, I think that most of that testing should be on the vendor that develops that, because they obviously know their own tool and they have the best way of testing. But I can't just say that as an insurance company, you don't have an obligation to look at that and to do some of your own testing and validation either. And again, I would say, what we know with AI is that it is very generative, right? And so part of the guardrails, I think that you would have to talk through and understand from your third-party vendor is what kind of testing is going on as this AI tool continues to evolve, right? Because we know as it continues to evolve, it gets more data, it learns more things. Is it staying within the construct that it was originally intended, and how are they verifying that? I don't know that I expect an insurance company to have the resources and the wherewithal to be able to do that, but I do think as a subscriber or purchaser of that product, you should be asking those questions of the vendor and making sure that you understand it.
Last question on that. So,
Yeah.
do Missouri companies be expecting that the draft regulatory tool, or regulatory review tool being actually put out? We get that from the department in the next couple of years?
So I don't really know, and I'll have to look at it to make that determination. Part of the issue that we have in Missouri is kind of an old standard, kind of coming from a Supreme Court case from back in 2012. So we can't really do a lot of things informally, like a lot of the NAIC stuff now has been done through model bulletin, quote unquote. If we were to do something like that in Missouri, I believe that we would have to probably do that through some sort of promulgated rule, through an administrative rulemaking process, if it wasn't done statutorily. I don't know that there's enough legal authority and justification to do that. Having said that, I like to find creative ways of problem solving. And so if I were, for instance, to get requests from the industry that this is something they felt would be helpful, then I think that we can approach these things as, a safe harbor type of approach. So that, as I have said with other things, if you go through and do this tool, you could expect an expedited review of your filing, right? Because quite honestly, that could help expedite it if it's versus answering 45,000 questions. If we were to have some type of tool that might help expedite the review of it. So when we get to that point, that's kind of where my thoughts will be going. No guarantees, but that's kind of off my gut. Sure. Yes.
Are you finding any trends in the types of consumer complaints that you're getting?
Well, everything, if we're just talking P&C, and I would say, homeowners is obviously dominating everything right now that we're seeing. The biggest issues that we're seeing that are coming in from these storms are delays, not so much in forms of denials, but obviously it's the scope of damage. There's definitely differences. A lot of adjuster complaints this year. And so, and odd, right? Because it's been people who are complaining that they're on their fourth adjuster now. And they feel like that's a runaround. But again, when I've gone out to these town hall events and I've said to them, okay, so the insurance industry doesn't have the Austin Powers cryogenically frozen tube where they can cryogenically freeze claims adjusters and then unfreeze them when we have these events. So what happens is, when you have a wide scale event that just doesn't hit Missouri, but it hits Illinois and Indiana, Kentucky, and Tennessee, they're scrambling and they're bringing in people and they're trying to be as responsive as they can. Sometimes that means, juggling them around for a while. That's not meaning that your claim isn't taking precedence or priority. It's just they're trying to get to things as fast as they can. And once you tell them that, they understand it. And so it kind of diffuses that situation to a great extent. But that's kind of a new one for us, is to really have, very heated, nasty complaints of, I've had 4 adjusters and I've had to, okay, calm down, we'll get you through that. We've had a little bit of issues with, what they feel is non-responsiveness, and a lot of times it's related back to some of the reassignment and claims adjusters. Brian mentioned it earlier, we are starting to get the calls now from some of the St. Louis area of people who have those expectations that they should have their whole roof redone, or that the whole house should be rewrapped. And so, those are difficult conversations for us too. People don't like it when we have to tell them, sorry, but that's not the way it works. Because, again, they'll go back to a claims experience that their cousin had 3 years ago in a different storm someplace else, and, well, they got their whole house wrapped. So, that's kind of a big issue. Yeah?
Are you seeing many insurers offer endorsements for things like matching of, tell me a little bit more about what you're seeing on that side of things?
And so this is where I'm gonna have to claim a little bit of ignorance because I don't look at filings myself anymore. I did start out there, but I don't actually see them. My sense coming from the industry side is that I think everybody is so focused on trying to manage just the volume and the scope of these roof claims. I know the company that I worked for, we were not even thinking that way, right? We were just literally trying to get a handle on, the frequency and severity that we were seeing, not just in Missouri, but across the Midwest on these types of claims issues. I believe that we're going to get some pushback legislatively from folks that believe, that this is really truly something that people are entitled to. And I think we're going to have to do a lot of education about unintended consequences and what those can mean. But I can't honestly tell you that I've identified or I've heard of any company offering something like an enhancement right now off the top of my head. But if your company does, call me. Yes?
You talked earlier about the recoveries on claims, and I was just curious, generally speaking, when a consumer makes a complaint about a claim, how often is there actually some further recovery versus you look into it and say, no, they've done what they should have in this situation? And
I want to say that we're successful in about 60%. It was actually something that I asked earlier this year. I think we're running about 60%. The vast majority of the contacts that we have through Consumer Affairs are really educational. I mean, a lot of those inquiries and phone calls are just that, just trying to hold their hand and walk them through and give them basic education. But, ultimately through our Consumer Affairs Division, we're not a court of law, so we can't order, there's no ability to order anything. It's more, and I would say this, and I didn't mention this earlier, but how many of you heard about Senator Hawley and his review of the insurance industry earlier this year? I don't know if any of you heard that. Had any of you heard that he set up his own complaint hotline and website to investigate complaints? Well, we found out about that. And so we were finally able to connect with his office to say, hey, we're here. This is kind of what we do. Kind of have the licenses, kind of have these processes. Can we help? And so we were able to get Senator Hawley's office to actually refer all those complaints to us, which again, I look at it as a win for the industry that we're getting those as the regulator, not Senator Hawley. My Consumer Affairs Director would like to disagree with me because it's been a lot of additional work. But what we've tried to do is, particularly with those Hawley complaints, is to make sure that the companies know, hey, hello, this is not just the average Joe coming to us directly. This one passed through Senator Hawley's office. Would you like to take another look to make sure that you want to maintain your position on this file? And that has actually been received quite well. So I think that we've been able to hopefully resolve some of those in particular, perhaps a little bit more satisfactorily. Good questions. Oh, yes?
Are you getting any pressures or feedback as far as to the average consumer, our premiums skyrocketing 20% and the impact that's having on people being able to buy homes. You know, simply because they can't afford the insurance premium or the availability of the insurance that the mortgage company wants. You know, feedback that coming on how it might be impacting on a bigger scale.
So we always get consumer complaints about rate increases. I know it's gonna shock you, but people don't call us to compliment you when there are rate decreases. But they do call us to complain when we do have rate increases. So that's kind of I would say that's a continuing, trend always. The interesting thing that we've had this year is that I've actually had several meetings with realtors. Realtors are very concerned. They are very, very, very concerned. And they've actually talked, they've even brought up the issue with roofs. They're having a lot of concerns with what's going on in roof coverage because they believe that there's some potential legal liability exposure back on them in terms of their representation in a real estate transaction. I had the Missouri Realtors Association, had several representatives come in and visit with me, I want to say late June, early July, and they had even mentioned what they perceive as a common practice of insurance companies, quote unquote, just changing their mind. And I was like, let's get a little bit more into here what's actually going on. And I think what's happening, and this is sort of reading between what they were complaining about, I think you have the typical, situation where, right, a young home buyer, their realtor tells them to go out and get an insurance quote. Do they do that? No, they wait till 3 weeks. It's a week before closing, and then they call and they say, hey, I need a homeowner's quote. So an insurance company is trying to be helpful, give them a binder so that they can close on time. Well, then what happens is that an inspection occurs, and then when they go out, then they look and they go, oh my God, this roof is 45 years old. Sorry, we can't cover it. And then that can sometimes blow up a transaction, or they're having those folks come back and complain to them after the closing. And that's really where the frustration is. So again, we did a lot of education of, you might want to just not only tell them, like first week, go get that insurance quote, you might want to follow up with them a couple of times, because I said they have a right. They have 60 days to underwrite these policies. So yes, they can do that. And so try to give them a little education and nudge them kind of to try to help me help you, as we like to say. Yeah.
We've covered P&C. Any news or current outlook on health insurance in Missouri?
Yeah. There is. So when I first left the department, just for full disclosure, I actually went and left, and I worked for Blue Cross Blue Shield for 9 months. And then I got a phone call from AAA that said, hey, would you like to come work for us? I'm like, please God, get me out of health insurance. It is the line that it is the single most challenging thing out there. And it's challenging because of what it is. It's challenging because they have, you think you guys got it bad where you got, us regulating you. Imagine having both federal and us all doing this to you at the same time. So the regulatory wise, it's very challenging. And then there's a whole lot of societal and budgetary issues and everything else. Probably the biggest thing that has happened is, the premium tax credits are supposed to be going away at the end of this year. That is expected to have a very dramatic impact on, in particular, the individual market. And there are a lot of us who are very concerned that it could actually collapse that market, because what we know will happen is, right now you've got 40-50% of folks that have individual policies who are receiving these premium tax credits, and in many cases they're getting policies for $10 a month, sometimes free. Well, when those subsidies go away and they have to pay the full freight, the healthy kiddos are going to say, yeah, no, I'll be fine. I'll just go do the urgent care on my own, which is going to leave a whole lot of sick people, which is just going to, it's the death spiral. We, through the National Association of Insurance Commissioners, have been petitioning, and we've been raising this flag since this was first talked about early last spring, of please don't get rid of these premium tax credits. If you have to do it, can we do it in a phased approach? Please don't just pull the rug out from underneath this population. We're starting to hear on Capitol Hill that there are some Republicans in the Senate that are starting to understand the implications of this, and so we're hearing that we could see some legislative action within the next few weeks to hopefully shore that up. I'm hopeful that that will happen because I am very concerned about the impact it would have on our market here in Missouri. And Missouri is very unique because, again, what would potentially happen is you could have some working adults who right now are covered on the exchange in the individual market, but who could otherwise qualify for Medicaid. And I don't know if you remember this, but our state passed a constitutional amendment by referendum of the ballot to put Medicare eligibility into the Constitution. So where a lot of states would have, where they had expanded Medicaid through a legislative process, they can go in and revise all those requirements for eligibility. Missouri will not be able to do that. So we could actually see a big portion of that population move from the insurance market to the Medicaid world. So that would be kind of an unexpected surprise.
Has there been any health insurers that have left the state? I remember seeing a map several years ago where there were a couple counties that really just maybe had one provider. Has that changed at all?
So we have, every county has 2 insurers in it this year, but we've had some significant, I guess I'd say a pullback this year. So Aetna withdrew from the individual market. So we're in St. Louis, I think we had 7 different carriers. We're now down to 6. Most notably and troubling for us is with that Aetna pullout in St. Louis. There is now no health carrier that has BJC in their network in the St. Louis area. That's a problem. That's a problem. You made me use the health side of my brain. Hi, yes.
Yeah. With you being new in your role, are there any areas that you would like to develop, such as maybe a fraud division?
Oh, my girlfriend, you were speaking my love language. So yes, on Angie's big list of the 2 to 3 year aspirational things, yes, I really would love to see it. We do have mandated fraud reporting in the state of Missouri, but as you know, we would simply take those fraud reports and then we would have to pass them on to local prosecutors to actually pursue those cases. And, understandably, prosecutors are looking at, all the cases that they have time and resources for. And I'm not going to second guess anybody, if they're looking at child sexual abusers and murderers and rapists versus insurance, they're kind of making the decision that they need to pursue those other criminal actions. So insurance fraud cases are falling by the wayside. And I'd actually had this conversation with Brian previously, so he can attest I'm not just making this up on the fly, but I really would like to look at Missouri adopting a model of a fraud investigation unit where we have embedded prosecutors that have the ability to file and actually prosecute cases in any jurisdiction in the state. That would be Angie's kind of aspirational goal, but I can't just do it on my own. It will require a little legislative help, so we'll get there hopefully.
Awesome, thank you.
Thanks. Great question. Yes.
You mentioned your involvement with technology and maybe cybersecurity in there too, hopefully. So could you list a couple of things maybe that you see insurance companies doing well that you're noticing a trend of, and maybe some areas that we could get better?
I would just say this. So, because of all the cybersecurity issues that are going on now, we had, I think it was the Erie Insurance Company in Pennsylvania, I don't know if you guys heard, that they were the subject of a ransom attack. So basically, hackers access their systems and block them from their own systems. I want to say it was like for 2 to 3 weeks where they weren't able to pay any claims at all. So these are the things that keep us up at night as regulators. So, what I've seen is, there is an increasing amount of attention that we're paying to these cyber issues. So we're going to be looking more closely at your own internal guidelines And that's not to be that we're criticizing it, but it is to give kind of an independent eye of, have we truly checked these things out? And in some cases, we learn things, right? As regulators, we have these conversations with our colleagues in other states, and we could learn something maybe that had gone wrong in an Erie. And maybe we're able to come back and talk to you about that, say, hey, have you thought about this? Now, we're not gonna tell you, hey, we learned from this Erie thing that, this is something you should do, but we may ask those questions because we're trying to get you to that point and educate you. I think one of the big pressure points that insurance companies don't think about that is actually a very huge exposure for you as an industry is third parties, that you're accessing your systems, right? I mean, I can think of at least 3 cyber events, major cyber events that I know of, where the breach actually occurred through a third party. So that's always going to be an area where we're really going to dig and kind of poke to make sure that you really do have everything, buttoned down. Anything else? Y'all didn't stump me, I don't think.
Well,
But I'm really glad to have you.
thank you so much for joining us today. We really